Good afternoon. This is Brad Dennis with BIS Commodities with your weekend or week update. This is for the week of December 30th through January 4th. In the grains for the week, we're looking at corn down 14 cents, beans down over 50 cents, and wheat down by 31 cents. So kind of a poor way to start out the year for grain prices, but there's some reasons behind it. First of all, we're looking at corn settling today down below its 200-day moving average. There was a gap created back on July 3rd, I believe it was, in the March corn down around that 783.5 area. And today we were able to go ahead and take out that gap. We closed the corn below the 200-day moving averages. So we still are looking at some pressure on this corn market. What was the catalyst of it all? Probably just terrible export sales still. 49,000 here announced this morning. So we're not selling any corn on the global market. We're still hearing that we're about $30 more expensive than Argentina that's booking corn for April delivery. So until our prices come down and become competitive there on the export market, we're probably going to see this corn market continue to decline. Now, one interesting thing though about this market is you got to remember what's the makeup of the balance sheet that we're going to see next week. Well, if you look at total demand, you look at the export market only being about 10% of total demand. So it seems like there's a lot of emphasis on that export market, whereas maybe it doesn't mean as much right now. Bottom line is trend is down, and we're continuing to take out these support areas, and until we have somebody come in and aggressively buy this commodity, we'll probably continue to see lower lows. It's kind of like the wheat market where the funds are extremely short it. What's causing them to cover their shorts? Well, until there is a reason for them to cover their shorts, they'll probably continue to add on to the position. Now, the export market, like I said, is terrible for the corn market, but when you look at the domestic market, we continue to see higher basis bids, and that's really what we saw today, and maybe that's what we need to have some support. You look at all those spreads of how the March-May excuse me, came to almost even money today. I think it traded there a little bit, but you get that March-May in an inverted market that's saying, hey, we want the corn right now, and maybe that's where you start to stop the slide a little bit. Now, producers selling because of the slide is not being seen. Bin doors are pretty shut, so domestically we have to bid up for it, and we're trying to get the corn out of these strong hands, either through a solid basis or higher basis, or through the spreads right now. So that's what we're looking at in corn. As far as other information that came out today, we did see an analyst or a noted group that does some estimates on corn. They looked at the corn yield. It was 122.3, I believe, for the USDA. They raised that up a bushel to 123.3, cut out about 150,000 acres harvested, and came up with a 10.8 production number. Government's playing with a 10.725 production number right now. So we'll see what they have next Friday, and we'll look at that more closely next week. In the beans were all about cancellations this week. China came in and did it again. They canceled about 315,000 beans, and that really set the tone on Wednesday, Thursday, and then finished up the week here Friday. We did take it down to its we took March beans down to its post-harvest low of around 1356, bounced up off of there, but still had the lowest close since that post-harvest low. So that's not really saying, hey, this is a reversal down here. We might consolidate and chop around here a little bit. Our export sales this morning were good. We expect next week that they're going to be poor because they're going to take out that 315,000. And we're also seeing record basis here domestically. So once again, we're using it domestically, but if we're concentrating on the export market, actually with beans, it should be fine. 135%, I believe, is where we're at of sales compared to this point of last year. So we're still selling beans out there. We're still loading beans. We do have some cancellations that we're kind of dealing with right now, and we're also dealing with pretty decent weather down in South America. So they're probably taking as much weather premium out of this market as well. And if you're a producer down there, you're starting to sell a little bit more just because you're more comfortable with your crop. This week we also got some numbers out on the economy. Look at the FOMC meeting, Federal Open Market Committee meeting, and guys came in and kind of shocked the market by saying, hey, we're a little divided on this bond buyback program now. We're thinking that maybe we can end this in 2013. When they first discussed it last year, it was basically said be open-ended, and we're going to do whatever we can to save the economy. Well, come in and we find out that the Fed's a little bit divided on how long this should last. That rallied the dollar, so we had a 3-day dollar rally that really took the dollar index up about $1.50. And even though we're a little disjointed with the dollar again, you just can't help but notice, hey, dollar's getting a little bit stronger, and that should be negative on the commodities as well. The other thing that happened this week on the economy is we did get non-farm payrolls. And non-farm payrolls came in about 155,000. And that was actually at the lower end of people's estimates. Earlier in the week, we had ADP number came out stronger, so people were revamping their estimates for the non-farm payrolls, and to see a 155 was a little disappointing. Plus, we saw a 7.8% unemployment rate, and last month's unemployment rate was revised up to 7.8 as well. So seeing those numbers, that caused the dollar to kind of come off its spike up today, fill its gap as it opened higher, it came down, filled that gap, and maybe this kind of tempers off the dollar a little bit, telling us our economy is still struggling to get by, and we still need the stimulus. So maybe the Fed was a little ahead of itself, talking about ending it anytime soon. Next week will be interesting. Like I said, we're going to be looking at the USDA's supply and demand report, and that's going to be on Friday. That's going to look at December 1st corn stocks, which will be very interesting for people to see. We'll see the balance between any kind of increase in yield versus any abandoned acres. NASS will be out with their silage survey, so we should have some fairly accurate numbers out there. Also on the beans, well, let's get back to the corn first. You'll also look and see what happens with the feed needs of corn, which is 50% of the demand. And you got to remember that the past two cattle on feed and hogs and pigs report has not lived up to the bullish numbers that traders had thought they would. So meaning that we've got a few more out there, so maybe that does keep that feed number intact somewhat. And we don't lose a lot of demand over there. Obviously, we're losing demand on the export side, but like I said before, that's only 10% of your total demand number. So you take a little bit off of there, sure. That'll probably be offset by any kind of back offset in production, and we might just stay with the same ending stocks number that we've seen before. On the bean side, a little bit of thought that you could see a bump up in bean yield, and if we do see that, that's fine. Still, you're about 150 million bushels below what our crush was last year. You're still 15 million bushels below what our export sales were last year, or our exports were last year. So, I mean, you've got room to tweak demand if you want to. You can mold that any way you want to, actually. So it'll be interesting to see what the government has to say about that. Also, a lot of people are expecting some big moves on the closes this next week. You do have a index fund that's going to be coming in here and rebalancing, and they're going to be selling corn, beans, and wheat in Chicago, buying Kansas City wheat, buying meal. So they're going to be. It's going to be interesting to see how they handle that on the end of the day, because you're talking about some sizable amounts that really can move the market. And we'll just kind of have to wait to see how that all pans out. I imagine it will affect the market for the first couple days, and then people will probably not really pay a whole lot of attention to it and start positioning themselves for the S&D report on Friday. So that is your update for this week of December 31st, January 4th. Hope everybody had a safe and happy New Year, and we'll be on again next week. End of broadcast.